Welcome everyone to the standard and itemized deduction segment. We'll be talking about standard and itemized deductions, taxable income, and then the tax. Once again, my name is Gail. Let's go ahead and get started. In the previous lesson on income and adjustments, Form 1040 and Schedule 1, we are now down to line 7, adjusted gross income. Adjusted gross income represents income from all sources adjusted by items such as educator expenses, IRA contributions, etc. In this segment, we'll speak to line 8, standard or itemized deductions. Deductions are subtractions from a taxpayer's adjusted gross income. They reduce the amount of income that is taxed. Most taxpayers have a choice of taking a standard deduction or itemizing their deductions. When taxpayers have a choice, they should use the type of deduction that results in the lower tax. TaxSlayer software, which is our preferred software, will ensure that the taxpayer receives the higher deduction. As stated, the taxpayer has a choice to use the standard deduction or the itemized deduction, which is higher or most advantageous to the taxpayer. The set standard deduction is dependent upon the taxpayer's filing status. If we will look at the chart represents standard deduction. Use this chart for the standard deduction amounts for 2018. If the taxpayer's filing status is single or married filing separate return, their standard deduction is $12,000. If the taxpayer's filing status is married filing joint return or a qualifying widow or widower with a dependent child, the standard deduction amount is $24,000. If the taxpayer's filing status is head of household, then their standard deduction is $18,000. You will notice the asterisk at the bottom of the chart. If those conditions exist, it directs us to another chart. The first chart you see, the standard deduction is higher for taxpayers born before January the 2nd, 1954, or who are blind. That is the chart on the left-hand side. The information would have already been input into TaxSlayer software way back when the date of birth was input from the Form 13614C, which was prepared by the taxpayer. Now the chart on the right, the second chart, is the standard deduction chart to be used when the taxpayer or dependency exemption can be claimed by someone else. Once again, this information would have already been addressed on Form 13614C, line 10. Form 13614C, lines 4 and 7 ask for the dates of birth. Line 10, can anyone claim you or your spouse as a dependent? As I said, those two issues would have already been taken into account earlier in the input process, so TaxSlayer knows what the standard deductions should be. Now let's talk about the itemized deductions. Form 13614C gives me a hint as to whether or not the taxpayer intends on itemizing their deductions. If the taxpayer checked yes on line 4, the taxpayer will need to provide the tax preparer with proof of the expenses or the deductions. The itemized deduction form is Schedule A of the Form 1040 return. As you can see, itemized deductions encompasses medical and dental expenses, including medical premiums, real estate, taxes, personal property taxes, sales taxes, mortgage interest, and charitable contribution. All of those are included on the Schedule A. Now, publication 4012, pages F3 through F11 provides a screenshot of tax layer and interviewing tips for your use. Publication 4012, page F3, shows a tax layer screenshot of itemized deductions, as well as what items can and cannot be included as medical expenses. Please review that very carefully. Once again, the taxpayer is entitled to use the higher of the standard deduction or the itemized deductions. So now we're down to line number 8. Tax layer will drop in the higher proper amount of the standard or the itemized deduction on that line. Line 9 deals with a new provision in the law, qualified business income deduction. Well, now this is a new provision or deduction and has to do with that income, business income. Simply stated, the deduction is generally 20% of the business income that is included in taxable income. This deduction is allowed in addition to the standard or the itemized deduction. This new deduction could affect our self-employed, sole proprietor, VITA clients. Now we've come a long way. We've accounted for all of the income, taken the necessary income adjustments, arriving at adjusted gross income. From adjusted gross income, we deducted the standard or itemized deduction and the qualified business income deduction, arriving at taxable income, line 11A. This line is where the federal income taxes are figured. There are two places where the tax could come from, either the tax tables or the tax rate schedule, and is based upon the taxable income levels. You will notice line 11B, add any amount from Schedule 2. Well, this slide is Schedule 2 tax schedule. Line 46 on this schedule has to do with the Affordable Care Act, excess advance premium tax credit repayment. I will address that in full in an upcoming lesson on ACA, or the Affordable Care Act. For right now, suffice it to say, if the taxpayer purchased health insurance from the marketplace or the exchange and received help in paying their premiums from the marketplace, this is called advance premium tax credit. If the taxpayer received too much or excess advance premium tax credit, they are required to pay back part or all of the advance premium tax credit amount with their tax return. This schedule is the Schedule 2, line 46, is the only tax that our clients will have to deal with on Schedule 2. Okay, so now we're back over to our 1040 form. Line 11 on the right side in the money column now encompasses a full tax amount. You will notice I said a tax amount, not the total tax amount, only a tax amount. I said that because there are a few more items which we need to consider before getting down to total taxes. Okay, so I'll leave it right there for another day and another time. Thanks. That's all I have for today. Come back and visit me as we further explore VITA and taxes.